Welcome to Built, Trusted, Chosen, the podcast for leaders and marketers in trades and construction. Hosted by Wes Towers from Uplift 360.
Okay, g'day, Jarrel, and hello, audience. It's fantastic to have you on the show today, Jarrel. It's a dynamic and changing, ever-changing world we're living in the trades construction industry, and certainly in your field of expertise. I'm really keen to unpack some of your expertise for our audience, being trades and construction people. So perhaps you can introduce yourself. Tell us who you are, what you're up to these days.
Yeah, hey Wes, thanks for having me. I really do appreciate the introduction as well. So, hey everyone, my name is Jarrel. I am from Duo Tax. What we do is we specialize in preparing tax depreciation schedules for property investors. For those who don't know, they're essentially reports that you can use to claim on the wear and tear of your investment property and claim them as a tax deduction. So, yeah, happy to be here today, and yeah, I'm looking forward to our discussion.
Yeah, so it's an interesting field you're playing in because there's just so many moving parts, and it's going to be really helpful for people in the trades and construction to understand it to a degree, just so they can be aware of it. So when they're talking to clients and so on, that they know what's going on. But there's just so many things changed over the last few years. Even you had building materials skyrocket, and then that obviously changes the dynamic of evaluation, or all of these things. Do you want to speak to
Yeah.
some of those key changes that are occurring over the last, say, 5 years or so?
Yeah, no, 100%. So yeah, it's very interesting actually. So we've seen, yeah, the prices of building materials increase as well, and even the demand for housing's also increased quite a bit. So in terms of the value of getting a depreciation schedule, how it works is we calculate the tax depreciation schedule based on the construction cost of a property,
Right.
and based on that construction cost, you can either claim on two divisions, Division 40 and Division 43. So your Division 40 is referring to your plants and equipment, essentially the things inside the house, while Division 43 is referring to the infrastructure of the building itself. So
Yeah.
essentially, your flooring, and certain aspects of the original build of the infrastructure as well. And
Yeah.
with the prices going up and things like this, the industry rates that we use to actually calculate the construction cost also gets affected. So
Right.
it's really interesting actually. There's a lot of talk at the moment just in relation to how this can impact how much deductions you can claim as well, when you do purchase an investment property. So, it's quite an interesting topic to discuss. Yeah.
Complex and always changing. It sounds like. And so you speak of the two aspects of the depreciation. So, to my knowledge, if you buy an existing dwelling, the rules change somewhat to if opposed to if you're buying building something new, so off the plan, or building a house and land or whatever it is, more depreciation on those new builds. Is that right?
Yeah, so generally speaking, that would be the case. So the reason why is because with new builds especially, if you purchase a new build as an investment property, you can actually claim on your Division 40 and your Division 43. So your plant and equipment, as well as the capital works of that existing infrastructure. And
Yeah.
essentially with new builds as well, there's a lot more depreciation you can claim, generally speaking, which is why every time you do purchase a new build as an investment property, it's always worthwhile having a look at getting a tax depreciation schedule just to maximize how much deductions you can claim based on the wear and tear of your property assets as well. Yeah.
Yeah, great. So I suppose the new builds are fairly clear cut in what you can and can't do. With the older ones, I suppose because there's a limit of how many years you can claim over an older dwelling. How do you go about determining what's actually um, been the works that have been done more recent times? If you're buying something, you won't know precisely when a renovation occurred, for example.
Yeah, for sure. So especially with the I guess older sort of builds, uh, an ideology that most people have is, oh, because my property was built, in the 1980s or 1990s, I can't claim depreciation on that property anymore. safe to say that is a myth, and that is not always the case. The reason why is, yes, you may not be able to claim back on the original, wear and tear of the original infrastructure, but you can claim on, let's say, new renovations that were done to the property. So, for instance, we had a client come in. They had a 1980s build, and they were mentioning, oh, like, can I claim depreciation on this? I can't claim on the original infrastructure. What is there left to claim? So we had a look at the property ourselves, and we realized that that client, or the previous owner, actually has done some renovations on the build. So there's new paintings that were done, new floorboards that were actually installed as well, and even renovations that were done by the previous owners is something that you can claim as depreciation for
Yeah.
depreciation schedule as well. So it's always worthwhile to, even if you aren't sure if you can claim or not, it's always good to double check as well, in terms of
Yeah.
getting an estimate. Can I claim depreciation on this or not? And a registered quantity surveyor can double check that for you as well. Yeah.
Yeah, right. So I'm curious. I didn't realize that. Did you mention painting? The paint can be claimed.
Yeah, yeah. So there's a range
Yeah,
of things that you can claim. So the paint, any new floorboards that were installed, new kitchen, bathroom, any sort of renovation that was done to the original infrastructure of the house is claimable
yeah,
through depreciation. Yeah.
yeah. But things like carpet, because you're buying it with that, you can't claim that. Is that right? Because that's like a fixture. Is that kind of? Yeah, I'm
Yeah.
just trying to
So
get my head around it. It's kind of
yeah.
complicated.
Yeah, fair enough. So, just to distinguish between the two, um, things that I guess are part of plant and equipment that a previous owner may have purchased. So, for example, like carpet, tables, chairs, you can't claim that as depreciation just because they're considered a second-hand sort of investment. So
Mm,
those things are you can't really claim. You're not eligible to. But for renovations where things were done to the original build of the property. For instance, like the paintings on the walls, or having a new wall installed, or even like a new granny flat, where it's been like built down onto the existing like ground. Those
yeah,
sorts of renovations are claimable because there were changes done on the existing infrastructure of the property. So if you had any
yeah,
renovations, or even if previous owners of an investment property had done any renovations that altered the original infrastructure of that property, that is something that you can actually that you can claim the depreciation schedule for. But
yeah,
the thing is, in terms of, I guess, those secondhand, um, sort of like plant and equipment renovations, like
mm,
your tables, your chairs, you may not be able to claim like depreciation on that directly, but there's this thing called a capital loss schedule. And that's something that we include in our depreciation schedules here at DuoTax. So essentially, when you decide to scrap those sort of like plant and equipment and replace that with new tables, with new chairs, you can actually claim those scrapping value as a capital loss. And that's something that you can use to offset
mhm.
any capital gains tax that you'd have to pay in the future if you were to decide to sell a property. So that's also something that
Ah.
you can consider, yeah, when you do purchase a depreciation schedule from us. Yeah.
Yeah, makes a whole lot of sense. So that you really do need the expert to cast their eye over it, because there's just so many opportunities you might miss. Just thinking through the secondhand scenario, what happens if you're buying an investment property and the air conditioning is broken? So you negotiate for the current owner to replace that before you take possession. Is that therefore secondhand because they were the original owner for the short term in the sale process? Or and if that's the case, you're better off negotiating a discount and installing the air conditioning yourself, you know what I mean? How does that
Yeah,
all work?
yeah. Yeah, no,
Yeah.
that's a really good point, Wes. So let's say, for instance, right, a client has an air conditioning unit, right, that a previous owner installed. That air conditioning unit is classified as a secondhand plant and equipment, right?
Yeah.
Secondhand because it was installed by the previous owner. So when you do depreciation, like for your investment property, that's something that isn't claimable, because it would have been installed by a previous owner and it would be classified as plant and equipment. However, let's say you were to scrap that air conditioning unit and build your own air conditioning unit. When you scrap that air conditioning unit, what you can do is you can claim that old air conditioning unit as a capital loss under a capital loss schedule. So that
Yeah.
offsets any capital gains tax you would have to pay. And that new air conditioning unit that you do place or establish can be considered as depreciable. That's a depreciable asset because that's an investment that you've made for yourself within your investment property. So you can claim that as a depreciation for a depreciation schedule. Yeah.
Yeah. Yeah. Okay. It makes a lot of sense. And so, what do you see going on in the market right now? I suppose not so much in your what you do for work, but you're obviously bumping into all sorts of people, and there's a lot of noise, obviously, and that'll continue. It's always there's always been discussions around negative gearing and so on, as far as I can remember. Um, I've
Yeah,
been
yeah.
debated,
No,
and these things pop up and they go away, and all sorts of stuff.
yeah.
So
It's a very, yeah, it's definitely very interesting. When we talk to different clients about these sorts of things, negative gearing is always something that pops up quite a bit. So one thing that you can do to actually offset negative gearing is actually getting a depreciation schedule, because one of the benefits of getting a depreciation schedule is you can actually use that depreciation to claim back on tax deductions and as a result improve your cash flow. So if you had issues about negative gearing, thinking, I'm putting in a lot of money into my investment property, but I'm not really getting much in return. Actually, the two biggest things you can do to improve your cash flow is one, your interest. So that's something that you can discuss with your accountant. But the second biggest thing that you can do to improve your negative gearing is actually getting a tax depreciation schedule. Depreciation is actually the second biggest um, kind of offset to negative gearing that can actually help you improve your cash flow at the moment, right? So
mm,
uh, yeah, if you ever had concerns about, I guess, I'm putting in a lot of money in my investment property. I'm waiting for that value to increase, but I feel like it's not really there. Sitting kind of like afloat or barely surviving. Getting a depreciation schedule can actually save you a lot. So let's say, for example, you're able to claim, let's say, 5 grand in deductions, right, for an investment property. That 5 grand in deductions isn't just something that you can claim for 1 year, but actually, that's something that you can claim for a 40-year span from the construction date of an investment property. So let's say you were to purchase even a property built in 2010, right? Um, and let's say you're eligible to claim 5 grand in deductions over the next 40 years from 2010 all the way to 2050, and right now it's 2026. That leaves you with 24 years of claiming 5 grand in tax deductions over the years until 2050. And if you think about it, that is a massive tax saving that you
yeah,
can actually receive for yourself, right?
it's,
And
it's
you know,
huge. Yeah,
it's a massive boost to your cash flow because you can use that extra cash flow to focus on other aspects. Maybe you want to invest in shares. Maybe you want to purchase another investment property. Like who knows, right? But
yeah,
that's something that you can use for yourself. That's a benefit for yourself that you can actually implement in other aspects of your investment portfolio. Yeah.
yeah. That's fantastic. And so you get the report, the depreciation schedule. You just hand it to your accountant, and they plug in the numbers, and you
Oh,
do it
that's
once, and
exactly.
and that's good for years.
Yeah, yeah, exactly. The great thing about getting a depreciation schedule, it's a one-off cost for you, right?
Yeah,
It's not like something that you have to, it's not like a subscription where you have to pay like every single year, right? It's a
yeah,
one-off cost for you. You're able to claim deductions for who knows how many years, depending on what kind of property that you get. And at the
yeah,
same time, that one-off cost that you pay is also tax deductible in and of itself, right?
yeah,
So there's a
yeah,
lot of benefits that you can get from getting a depreciation schedule from a tax perspective.
yeah. Brilliant. And so, because duo tax, you guys do a few other things. Is that right as well in terms of property valuations and what else was it? Insurance, even, and all sorts of stuff like that. Is that other people at duo
Yeah,
tax after that? Or, yeah,
yeah, we do a range of different things. I think most people know us for our depreciation schedules, to be quite
yeah,
honest. But yeah,
yeah,
so we've At the moment, we've got a property valuations arm as well. So we assist with preparing property valuation reports for tax purposes. So if
Yes.
you're looking to get, let's say, a capital gains tax valuation report, a stamp duty valuation, an SMSF property valuation, or even a market assessment for your properties, that's something that we can assist with as well. And it's a
Yeah.
similar sort of deal. If you were to sell an investment property, and you'd have to pay CGT on that, we can have a look at that investment property and see if there was any change of intent. You know, whether you were like living in it and then you decided to rent it out, but now you're looking to sell it, you may want to be able to get a capital gains valuation report, right? Speak to your accountant about these sorts of things. But that's something that we can prepare as well, just so you can be able to offset the CGT that you do end up paying if you do decide to sell that investment property. Yeah.
Yeah. It's brilliant. You've obviously got a great reputation here in Australia for the depreciation reports, and it's good to have those add-on services. What do you think it takes as a company in your field to build? We like to talk about trust a lot because it feels as though it's being eroded, certainly in the marketing world. And I know your team is quite active with the marketing aspect. What do you think it takes to create trust in your industry so that people choose you ahead of the competition?
Yeah, no, I really appreciate that, Wes. Trust is it's a very interesting topic because trust is something that I believe is built over time, and it's something that doesn't just happen naturally, right? It's something that you have to earn. It's something that you really need to foster in the relationship between yourself and the client. They want to make sure that if someone goes to you, they're well looked after, and that's one of
Yeah.
the biggest things in Duotax that we pride ourselves with every client that we service, we really want to go above and beyond and provide that extra level of care factor. So it's not just as simple as, oh, I need to get a valuation done. I need to get a depreciation schedule done. We spit out the report and then send it to you. It's not like that. But we want to be able to
Mm.
build long-lasting relationships with all of our clients. Really want to sit down and diagnose actually what is your current situation at the moment. What are ways that we can help you out with in terms of your situation and maximizing your deductions as well. If you were to get a depreciation schedule or if you were to get a valuation report, what kind of things can we do to make sure that you get the most out of this report? So for instance, it
Yeah.
could be something as simple as like, oh, I've got this investment property, but I want to maximize the deductions on it, but I'm not too sure how. We can look at that investment property and even go out of our way to even inspect the property ourselves, right? Just to
Yeah.
see what kind of things we can claim, even if it's something as simple as an extra table or an extra desk, or even like a minor detail as a minor renovation done to this aspect of the property. If we can claim
Mm.
depreciation on that, we will go to your property, regardless of where it is within Australia, have a look at it and see everything that we can claim and make sure that every single thing is included in that report. Like we want to be able to go above and beyond for every single client to make sure that we maximize the deductions that they can get out of this report because we understand this report it's something that will last you like years and years on end, right? It's a one-off
Yeah.
payment for you, and it's something that can really impact not just the financial side of things, but even like lifestyle. And we want to be able to make sure that all of our clients are really cared for, and all of our clients really feel like they've been heard. You know, so that's why
Yeah.
yeah, we want to build that relationship and build that extra level of care and trust with every client that we do service. So, trust is
Yeah.
really big for us. Yeah, it's very
Yeah.
important, actually. Yeah.
Yeah, 100%. And you guys are really active, as I said before, with the marketing and so on, and I'm getting your name out there. Is partnerships or referral partners something that you are active at pursuing, or is it something you've considered? No doubt,
Oh yeah.
no doubt you're keen to build relationships with your regular, just your business accountant, or just your regular accountant, even. Um, that'd be great partners for you, I'd imagine.
Yeah, yeah, 100%. You know, we're always looking for ways to connect with different professions as well.
Yeah.
So any accountants, mortgage brokers, buyers agents, any
Yeah.
individuals that deal with investment properties, we'd love to have a chance to connect as well and see what we can do to help clients out. Because we understand, this industry, it's quite competitive as well, but we want to be able to make sure that every client that we do service and every referral partner that we do have, has trust that when they do come to do attacks, their clients and even their business is well looked after. Because, referrals,
Mm.
it goes two ways, we want to be able to provide that good experience for your clients to be able to boost, the client experience for the accountant's business or the mortgage broker's business as well.
Yeah.
We want to be able to add value for them and add value for their clients.
Yeah. Well, these reports need to be relied upon. Do people sometimes get audited for these sorts of things? And how does the liability kind of how does that all work for these
Yeah.
schedules? Yeah.
Yeah, 100%. So all of our depreciation schedules are ATO compliant, and the ATO really cracks in on these things as well. So the
Mm.
tricky thing with depreciation schedules is sometimes some providers can claim something for depreciation that aren't eligible to be claimed.
Yes.
And those sorts of things can get audited by the ATO, and the quantity surveying firm can actually get under the radar for those sorts of things. So
Yeah.
yeah, compliance is a very very huge aspect of these sorts of reports that we do, and
Yeah.
all of the reports that we do definitely do get audited and are ATO compliant as well. And I think that's a very important aspect of these things. Like we want to be able to maximize deductions, but at the same time, we want to make sure that these reports, can be accepted by the ATO at the end of the day. I think that's the most important part of these as well.
Yeah. Yeah. It's worth you can probably find someone who will do it cheaper and do a few little extra claims that
Uh,
are borderline, but it's not worth the risk, is it? It's just a bit of
yeah,
trust. You don't want to mess up your reputation over claiming a few extra dollars which weren't legitimately eligible.
yeah,
So yeah, it's
yeah,
really important just to get that stuff done right. Spend the money on getting someone who actually knows what they're doing, and get it
100%.
done correctly. Do you sometimes you see people having a crack at it themselves? Is that even a thing? So they'll just somehow give their
Yeah,
accountant some figures. Yeah. How's that go?
yeah. Look, Yeah, look, to be honest, like I've seen it several times as well, and feel
Yeah.
free to do so. I'm not saying, oh, you can't do that.
Yeah.
But the danger or the risk that you go along with doing those sorts of things is, again, how much depreciation can you actually claim, right? Are the things that you're claiming for actually eligible to be claiming depreciation on, right? So in the end, it goes back to the aspect of what kind of deductions can you actually claim and how legitimate are they? So with going up with a quantity surveying firm, you have that, I guess, that peace of mind that if I provide my investment property like to these individuals, they can be able to look at that investment property and navigate every aspect of that property. What can be claimed, what can't be claimed, how much can be claimed as well within that process. And you have that peace
Mm.
of mind of thinking, oh, at least if I go with these guys, I don't have to worry about my report getting audited. Is it ATO compliant? Am I claiming enough? Can I claim more? These sorts of questions can kind of go in your head if you try to do things on your own. But if you do decide to go with a quantity surveying firm, you can, at least have that piece that, at least these guys know what they're doing. With whatever
Yeah.
depreciation, whatever deductions can be claimed, I can be rest assured that they will be able to take care of that for me. And that's the kind of peace of mind that we want to provide to all our clients as well. We want to be able
Yeah.
to make sure that they have that experience and make sure that they're well looked after at the end of the day. And it's the same thing with
Yeah.
accountants as well. Like accountants, they can prepare a depreciation schedule, but it goes back to that sort of compliance check, how much deductions can I actually claim for this investment property? Am I
Yeah.
claiming enough? Are there more to be claimed? Right? It's always good
Mm.
to double check that with a quantity surveyor. Yeah.
Yeah. That makes sense. And so I suppose with being a national company, you've got people all around in the major cities, a little bit regional as well, or just the major cities?
Yeah, yeah. Oh, we service like anywhere through Australia. Major cities,
Mhm.
CBDs, regional as well. We service clients like all throughout. Like recently, we've actually had an inquiry. Oh, I've got this farm that I want a depreciation schedule done for. It's out in
Oh,
WA, in the
wow.
regional areas, right? Is that something that you guys can do? Can we organize an inspection? And the answer to that is yeah, 100%. We can definitely do that. So, from
Wow.
major CBDs, even all the way to those rural areas, that's something
Yeah.
that we can service. Yeah.
Yeah. So a farm, that's more getting into, your commercial sort of um, construction, isn't it? So do you have
Yeah, that's right.
specialized people working with the residential as opposed to the commercial?
Yeah, so with the quantity surveyors that we've got on our team at the moment, we can service both residential and commercial, and both are highly skilled
Mm,
in each of these professions.
mm.
I think a big thing with dual tax is some people think, oh, we only do residentials, but we do anything and everything, industrial,
Yeah.
commercial, residential. Like we've even had some clients ask us because they've got this multi-million dollar like luxury apartment that they wanted a depreciation schedule done for. Like that's something
Yes.
that we can assist with as well. We've even done like childcare centers, farms. Um, we've even done some jobs as big as stadiums as well. So
Oh, wow.
we've got a wide range of different things that we've done depreciation schedules for. But yeah, 100%. We've got professions and quantity surveyors experience in both the residential to even high-end commercial sort of jobs, and yeah, that's something that we can take care of. Yeah,
Yeah. Yeah, so just a little bit left of field, you probably, and I don't know how much visibility you have of the entire geotax and what people are doing, but with the, I guess, the rise of the buyer's agent um, buying in hotspots, are you seeing any regions that are becoming more active in recent times, or you don't have visibility of that because you're serving a geographic region?
oh yeah, look, with these sorts of questions, it's good to speak with your buyer's agent, just
Yeah,
to get
yeah.
you know, some more detailed information, for all the
Of
buyers
course.
agents out there, I'm sure, yeah, you guys know your respective regions as well. Just in terms of like what we've seen these days, the market is quite volatile. It's ever changing. It's always changing.
Yes.
In terms of like where people invest and where people are looking to invest, like we've seen like customers come in from all throughout Australia. So we've seen some in
Yeah,
WA, we've seen some in Queensland, New South Wales, South Australia. Like to be honest, it's with the property market these days, it's always dynamic. It's always
yeah,
changing. And yeah, I guess it's very difficult to predict as well. So, if you want to
yeah,
like more insight into these sorts of things, yeah, it's good to speak with your buyer's agent as well to get some more detailed information. But man, we've seen jobs from all throughout Australia. Yeah,
yeah,
like yeah,
yeah. Well, I suppose those that are building out, property portfolios, it's good that they can just get you and your team to deal with it no matter where it is,
100%.
around Australia, get them all done the same way, and not that there's a lot of people with massive portfolios. I know that it feels as though in the media sometimes, depending on who you read, it feels as though they think there's lots of multi-property investors, but yeah,
Yeah,
they're not as common as what some people might say. Um, this
yeah.
has been a fantastic conversation. I always like to make sure we cover everything that we should have because it's just a casual conversation and
Mhm.
we take it all sorts of different ways. What have we kind of missed? What's a question that I missed that we should have really covered, do you think?
Yeah, yeah, no, that's a good question, Wes. I guess a common question that like some people that I do come across do ask is, oh, if I get a tax depreciation schedule for my investment property, and let's say I do a renovation, let's say 2, 3, 4 years down the line, like what will happen to my tax depreciation schedule? Like, is that something that I need to get a new report for? Can I
Mm,
amend my existing report? Like that sort of thing. So in terms of these sorts of things, like here at DuoTax, we're happy to like, do amendments for existing reports that you've gotten a
right.
depreciation schedule for as well. Um, a couple of clients have come to us and say, "Hey, we've renovated the kitchen. Here are the invoices. I know we've gotten a depreciation schedule for you from you guys in the past. Do we need to get a completely new one?" The answer is no, you don't. We're happy to amend that existing depreciation schedule that we've made for you already.
Yeah.
So essentially, for any renovation that was under $20,000, we'll even do that for you for free.
Yeah.
So we want to
Wow.
make sure that, yeah, we want to make sure that you guys are well looked after, and we want to make
Yeah.
sure that you get the most out of your experience here with DuoTax. So, with these sorts of reports, like we're always happy to do these amendments because we want to be able to help you maximize your cash flow and help you
Yeah.
achieve your financial goals, right?
Yeah.
So, yeah.
Yeah, that's really great service. So if it's anything, bathroom reno or kitchen or what have you, I
Yeah.
suppose once you start building out a full granny flat in the backyard, well, then there's obviously very to work in there, so you've got
Yeah.
to charge accordingly. But it's
Yeah.
still amending the report as opposed to creating it from scratch. So you've already covered off
100%.
a bunch of things, and then you're just looking at introducing the granny flat into
Yeah.
that schedule. So
Yeah,
that's brilliant.
100%.
It's
Yeah, and yeah,
go on.
and even then, yeah, like let's say they done the renovation for let's say a bathroom, right? Or even for a granny flat. Does that mean that oh, I can only claim depreciation until like a set amount of years? If you've done a renovation to the original infrastructure, that 40-year timeline actually resets as well for another 40 years, right? So let's say
Right.
you've installed like let's say a granny flat in your backyard, you're eligible to claim on that granny flat for the next 4 years after you've installed that. So there's a lot of
Yes.
benefits that you can claim. So it's always good again to really speak with a quantity surveyor and let them have a look at the property as well, because there could be things that you may think, oh, I can't really claim on this, but actually no, you actually can. So
Yeah.
there's a lot of things that we can double check just to make sure that you are maximizing your deductions and you are claiming as much as you can so that you can improve your cash flow. So it's always good to yeah reach out and
Yeah.
yeah yeah.
Yeah, so that makes a lot of sense. So that's why sometimes you'll see the figures jump in a certain year, and that might be because uh, an aspect of what the property has run its course, and you no longer can depreciate that. Say it's the main house, it's hit the limit, but then the granny flat in the backyard is still
Yeah.
doing so. That's why you sometimes might see a jump in a certain year, and so on. Um,
Yeah, that's right. Yeah, exactly.
yeah,
That's
yeah,
correct.
yeah, got it. It's been a fantastic conversation. Thanks so much. I really hope the trades and construction people are listening, because it's really helpful when you're dealing, particularly if you're working on investment properties, to understand what some of the investors might be up to, and even to point them in the right direction if you're putting in a big proposal and quote for a particular
Yeah,
renovation, let's say. And then to try and get that quote over the line, you can say, "Hey, you'll be able to depreciate." Speak to an authority, but it's my understanding you
yeah,
might be able to depreciate some of this, and you should speak to Bureau Tax or speak to
yeah,
speak to somebody who knows how to do that. So it's just a great way to think about whenever you're selling something. So the trades construction people, thinking about what the value is, and what the additional benefits might be that the buyer may not be aware of. If you can help
yeah,
them see some of these benefits, then you've got a better chance of winning the work, winning the sale, in my view. So
yeah,
yeah,
100%. And at the end of the day, like customers want to feel like they're looked after, right? If you've got their
yeah,
best interest in mind and you're thinking, oh, if they get a depreciation schedule, I could save these guys, like X amount of dollars every year.
yeah,
It adds benefit for you as well because the client is thinking like, oh, these builders, they're more than just their trade. These construction workers, they're more than just getting the job done, but they really have my best interest in the back of my mind. And that
yeah,
can go a very long way for anyone because everyone wants to feel like they're looked after. Everyone wants to feel like, oh, I can trust this person. So it's always a
yeah.
benefit at the end of the day for you as well. Yeah.
Yeah, I would really encourage those in construction, particularly those that are working in the renovation or new builds as well, renovations or new builds, in potentially investment properties, to have a referral partner in the space you work in, just because, like, they'll naturally often have referral partners. An electrician will refer work to the plumber or the handy person or the painter, and they'll have their network of other trades. But to think a little more broadly and have referral networks outside of the trades, it can be really beneficial um, for the end service that you're providing. Building trust, reputation in the marketplace, by thinking about the customer in a broader way. So probably now's the time to tell people how they should connect with you and what the next steps might look like.
Yeah, 100%. Yeah, thanks a lot for that, Wes. So if you guys do want to know more, and even if you had a property that you wanted a depreciation schedule for, happy to get in contact with me. So my number, it's 0483 942 148. And my email is Jarrel, Jarrel, at duotax.com.au. If you wanted to know more and see how we could save some extra cash flow for your clients, feel free to reach out. My phone is always there. I'm open 24/7, so happy to, for you to give a call, shoot me an email, and I'll reply as quickly as I can. So yeah,
Yeah.
if today's conversation sparked any interest, happy to be in contact and see what I can do to help add value to yourself and your clients as well.
Thanks so much, Jarrell. And I'll definitely put all that in the show notes as well so people can find your info nice and easily. Thanks again for being on the show.
Yeah, appreciate that. No, thanks a lot for your time, Wes, and thank you everyone for listening. Hope you all have a fantastic rest of your day.
Thanks for listening to Built, Trusted, Chosen. Brought to you by Uplift 360. Visit uplift360.com.au.